2020 was the year of the electronic revolution. But as this revolution continues, analysts have warned that this could lead to a stock bubble waiting to burst. Leading analysts Cathie Wood and Michael Burry have predicted that an EV stock market crash is inevitable. The EV craze is reaching an all-time high, and the pace at which the whole industry is changing is extremely fast and fascinating. Some automobile giants have seen this and are already jumping on the train, while some others are skeptical about the whole EV industry. We've never seen anything like this before, not in the automotive industry at least. And this is exactly what we are going to talk about in today's video. Welcome to Investing Tips, your go-to channel, where we tell you everything about the market and its uncertain trends so you can make big coins. Investors are pouring massive amounts of money into EV startups and suppliers. This is sending stock prices through the roof and generating market capitalizations that don't seem to bear any semblance to reality. Meanwhile, traditional automakers, suppliers, and retailers are standing on the sidelines, stunned at what they see and trying to figure out how they can get in on the action. Maybe their day will come, but don't count on it. The bubble will probably burst before they get their chance. Some experts feel what's driving this irrational exuberance is Tesla's stock. It's defied the predictions of experts for over a decade, most of whom were sure the shares would come tumbling down. Others say with automobile giants venturing into EV, Tesla will probably decline. That's laughable to be honest, because Tesla is a few years ahead of the EV race. Tesla has thrilled investors and jarred others by soaring to a valuation of as much as $649 billion, more than what the world's 7 largest car makers were collectively worth at the beginning of the year. The company is now comfortably in a category by itself, defying even Chief Executive Officer Elon Musk's warnings. I actually said the stock is too high a long time ago, Musk said at the start of December, but they didn't listen to me. For startups aiming to mimic Musk's success and for traditional car makers struggling to disrupt themselves, most lingering doubts about the future demand for electric vehicles have dissipated. Thanks in large part to the Tesla phenomenon, a consensus has emerged that they are undeniably the future. In this world we live in, only the fastest and strongest horses can make it. We can see this in the early years of automobile, where we had the US and their 485 automobile companies producing 485,000 vehicles in 1913. Few years after the first automobile was made, by 1936, the whole industry was controlled by just 3 companies. History is clearly repeating itself, as we've got a bunch of startups dreaming of becoming the next Tesla. That's especially true of Chinese EV startups. At the end of 2018, we had only 40 EV manufacturers, just a fraction of the 500 in China alone. And they've got good reason to dream, at least for now. But remember, all these startups are minuscule compared to traditional automakers. They haven't sold many cars, they haven't generated much revenue, and none of them makes a profit. Even so, giddy investors can't seem to buy their stock fast enough. Investors are sniffing out other automotive opportunities that might offer a quick killing. Auto suppliers that carry even a whiff of future tech in their portfolios are at the top of their list. So, for example, Magna, at $18 billion, has the highest market cap of any traditional supplier in North America. But Aptiv, a tech startup that was carved out of Delphi and is half the size of Magna, is worth $33 billion. The question is, when will the bubble burst? This could go on for years, like the internet craze during the 1990s. A key signal to watch for will be a moderation in the rate of growth in revenue and gross profits. As soon as that growth rate starts to plateau, the smart money will make a dash for the door, and everyone else will be left holding the bag. Make sure you're not one of them. Save Tesla and NIO though. It's so clear that it's not just about EV anymore. There's this craze for new ideas and new things in the automobile industry. Maybe Michael Pai wasn't joking when he said it's likely we'll look back on this as the electric decade. This EV craze has not been good for a lot of industries. Some big players are not happy. It's really scary when you understand that. Tesla has a market capitalization that is worth more than the entire North American automotive industry put together. Aspiring electric truck makers like Helion Holdings and Lordstown Motors aren't even making product at this point, yet have market capitalizations in the billions. Last year, investors were awarding the XPeng about $1.7 million of market cap per vehicle it's expected to sell this year. If the same multiple were applied to Volkswagen, the German giant would be worth about $15.5 trillion. Instead, it's being valued at about $10,000 per vehicle. Remember, Volkswagen wasn't alone in watching its valuation take a hit from the biggest disruption to auto industry output since World War II. Vehicle sales in some markets were almost completely wiped out for the month of April. By June, the industry had taken on $72 billion of new debt to cope up. By the ending of last year, Li Auto had a market cap of $29 billion, making it worth more than Nissan. XPeng at $32 billion is worth almost as much as Ford, and NIO, whose stock is up more than 1,100% this year, has a market cap of $60 billion, which is worth more than BMW. Quick reminder for you to press the subscribe and like button if you have enjoyed the video so far. The potential market in the EV sector is enormous. There will be niches and ancillary businesses that will be successful along with vehicle makers. Investors in 2020 got excited by Tesla's stock run and piled into other names without thought of valuation. Other roads to electrification, beyond the electric car and truck makers, there are others trying to fill niches as the sector grows. Operators of EV charging networks are gaining attention with investors. Blink Charging, ChargePoint, and EVBox are all growing. The latter two are merging with SPAC Switchback Energy Acquisition and TPG Pace Beneficial Finance, respectively, to be traded publicly. This is a revolution taking place in front of our eyes. True, the EV has come to stay, as Colin McCarricker, head of advanced transport for Bloomberg, says EVs have become part of the general consciousness instead of the consciousness of a small number of people who care about them. It's historically low oil prices, a major economic downturn, a plunge in auto sales, and all these other factors didn't derail the growth. It gets hard to see what does. But all we know, this whole stock rocket testing is bound to crash. The two most famous bubbles of the 20th century, the bubble in American stocks in the 1920s, just before the Wall Street crash of 1929 and the following Great Depression, and the dot-com bubble of the late 1990s, were based on speculative activity surrounding the development of new technologies. The 1920s saw the widespread introduction of an amazing range of technological innovations, including radio, automobiles, aviation, and the deployment of electrical power grids. The 1990s was a decade when internet and e-commerce technologies emerged. History tells us that new technology has always been the cause of stock market bubbles. And this time, not just history seems to be sounding the alarm. Renowned analysts are also warning investors. Cathie Wood, founder, CEO, and CIO of ARK Investment Management, ARK Invest, an investment management firm that managed the largest actively managed exchange-traded fund in 2020. Who also made a monster call in 2018 predicting that Tesla would hit $4,000 in 5 years, representing potential upside of about 1,200% at the time. The head-turning call, which was doubted by many, came as Tesla was struggling to scale its Model 3 production and was facing a liquidity crunch. Just few days into January, Tesla surged more than 7% and hit Cathie Wood's 4,000 price target on a split-adjusted basis. Has also advised and warned investors about a looming EV crash. Also, Michael Burry, the investor whose billion-dollar bet against the U.S. housing market raked in $100 million and made $750 million in profits for his investors, thinks the same as Cathie does. Tesla stock skyrocketed about 740% in 2020 and has climbed 16% already this year, granting the automaker a bigger market cap than Facebook and making Musk the richest man in the world. Enjoy it while it lasts, Michael Burry added. No one can totally understand the EV rise, but I totally agree with Jeff Chamberlain, CEO of Volta Energy Technologies, who believes this whole boom is occurring because no one wants to miss the next Tesla. Makes sense when you think of it. The question is, which one's the next Tesla? Musk himself has described Tesla as having been close to bankruptcy, before only recently pulling off a combination of high-volume manufacturing and cash generation. The time and dedication it took the 17-year-old company to get there suggests a high risk of failure for newer entrants trying to catch up. Press the like button if this video was valuable to you, and don't forget to share and subscribe. Stay tuned for more such videos only on Investing Tips.